I'm forecasting, or certainly suggesting, that we might see as much as 20 trillion or more in Fed balance sheet expansion. So we're at, let's say we're slightly, we're under 9 trillion now. That means you'll be, probably somewhere around 30 trillion in the balance sheet. Unheard of. I mean, 5 trillion was unheard of. Remember in the fall of 2008, the balance sheet, before they had to get active because of Lehman, the balance sheet was 875 billion. We got up to 9 trillion this past year, and we're slightly under that now. And I'm saying we're going to jump to 30 trillion next year, or in the 12 to 18 month period there. And every central bank's going to do proportionally similar, because that's what it's going to take to try to turn a free falling system around. And because of the leads and lags, they'll print money and nothing will be happening. They'll print some more money, nothing's happening. And by the time they're done, they'll have pushed out that kind of money. That will jumpstart an inflation cycle like we have never seen in this country. Certainly, we saw 20% inflation rates in the early 80s. I think we're probably going to see 25% inflation by the end of this decade. I'm calling for $500 oil by the end of the decade. I'm calling for 20,000 gold by the end of the decade. I'm calling for $500 silver. Copper will be, through the roof at levels we've never seen. All the base metals, same thing. Natural gas will be at numbers we've never seen. It's going to be across the board. I think ag commodities will be big beneficiaries. It's funny how these cycles kind of work, because you say ag commodities aren't necessarily driven by the Fed, but it will be, because of a lot of policy over the years and just everything else that plays into it. It will be across the board a commodity cycle that will allow people, if they want to build some real wealth. But they got to be, they got to do it right. It's not a straight line. I've heard a lot of calls of commodity super cycle in the last 2 or 3 years, and talking about it running till the end of the decade or what have you. Yeah, what happens next year to commodities is going to be pretty severe. You could see gold back to these levels. I'm forecasting 3,000 pre-bust, rally now, but it could come back here. Silver, which is currently 24 or thereabouts, could run to 60 pre-bust, but then come all the way back here in the bust. So those, then maybe even lower. You have to be aware that there is, it's not a straight line. There is that big V before you come out of it. But at the depths of the bust, those that are in commodities, start accumulating commodities, I think will be rewarded very well between that period and the end of the decade. I think we're about to see gold break out to new highs, and I'm calling for 3,000 gold. May not happen by the end of the year. It could, but it's certainly going to be early next year. So I'd say between the end of this year and the first quarter of next year, gold could go to 3,000. I don't see gold going, there's forecasts of 1,400 and below, even some down to 1,000. I don't see gold getting hit that hard in the bust. I could be wrong, but I think gold probably has that big rally and then does a round trip back to here. That's still, that'd be let's say 3,000 back to back to 1,900. Would be a big, it'd be more than 50. It'd be more than 33%. Say a 35 to 40% correction maybe, which makes sense. If equities are going down 80 and gold goes down half that, that would make sense to me. Silver is a more volatile metal, so I think silver can go from here to 60, and then in a round trip come all the way back here, or maybe even below this, because it's much more cyclically sensitive. So I wouldn't be surprised to see silver go from 24, 25 up to 60, and then back to 20. That'd be a 2/3 retracement, or 2/3 correction to 60+% correction. But then after that, obviously the big run in the commodity run. In terms of ag, I don't have any targets. I will say in the super cycle, in the post bust cycle for commodities, I think it can go up multifold. It won't be just a double. I think it can go up multifold. And that's corn, wheat, soybeans, what have you. And again, I'm sure we're going to get to it at some point, so I won't talk about it yet. But there comes a cost to all of this. It may be good for the investor in commodities. From an investment standpoint, I think you're looking at a tremendous opportunity 2025 to 2030. I think real estate in general, if you follow my ultimate forecast, if we get that kind of hyperinflation, you're going to have hyper interest rates. You're going to have interest rates back up, I think, above the levels of the early 80s. That means the long bond above 15%, the 10-year long bond above 15% by the end of the decade. T-bills maybe at 20 or 25%. In other words, interest rates spiking dramatically over a 5-year period. If you think that through, that means mortgage rates will be up there too. I don't think real estate's an inflation hedge in that environment because, as you know, I mean, if you want to pay cash, you don't worry about that. But for most people, buying a home is based on that mortgage rate. You double the rate, and you're going to have a mortgage payment that's a lot bigger, more than double. So I'm not, people traditionally think real estate's an inflation hedge. I'm not sure it is in that environment. That's a long way of saying, but the one area of real estate that I think will thrive in that commodity cycle will be farmland. People don't realize that once we lose the printing press, once we lose the ability to monetize the debt, so we're going to lose both the printing press and access to capital markets. That means the government has to shrink. And how does it, because if your debt servicing costs are going through the roof and eating up all of your budget, there's no money left over for the military. There's no budget left over for welfare. There's no budget left over to fund the Social Security that you've outspent. There's no budget left over for Medicare and Medicaid. There's going to come a time in the 2030s, I believe, and again, I'm talking about the US, but this is really going to happen worldwide. There's going to come a time, in my opinion, just looking at the US, where you potentially could have 50% plus unemployment rates, no welfare system, no unemployment, no, very limited, if any, Social Security and Medicare, and no Medicaid. I mean, what, and no access to money.